Good Friday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man all the way from Philly, where today we're going to say go Eagles. Dimitri Pargamanik. How you doing, D?
Good morning, Will. How are you?
Good. You excited for the Eagles this weekend?
Yeah, definitely. You gonna watch the game?
I am. Meg, and we're definitely fair weather fans, but because we live in a strong Eagle rooting community, we definitely jump on the bandwagon come playoff time, particularly since my Jets never seem to make the playoffs. So Meg was talking about chicken wings and cheesesteaks,
Oh, that sounds awesome.
everything Philadelphia. So should be a good 5-pound Sunday.
Yeah.
Well, you want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need to talk to a registered investment advisor, call your RIA, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Let me share my screen. And anyone joining us for the first time, heads up, the reason we do the show is to answer any questions you may have about Market Chameleon tools, data analytics. If you want to come on a show and discuss strategies or something unusual you've seen, you could put your questions on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show live and ask your question, we also provide a link to Zoom. Click on that link. Once you get to Zoom, there's a button at the bottom, says raise your hand. Click on that. We'll let you in. Everybody could hear you and you could ask your question live and direct. While we're waiting for any questions to come in, we'll start out looking at the pre-market report, see what's trading in the pre-market hours. And if no questions come in, what I'll do is navigate to some parts of the website, see if we could get some insights on trading, market insights. Maybe I'll go default to some questions that I get through the emails and discuss those questions. Okay, so let's start out with the pre-market report. Then we'll stop me if you do get a question pop in.
Awesome.
Pre-market report. These are stocks trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. See 25 stocks made our percentage gainers list, 39 on our percentage decliners list. From this perspective, it looks like we're setting up for bearish bias at the open. What we want to do is filter this list down to a group of stocks to get a little bit more insights what's going on, because you could see here on this list, we have small cap stocks, ETFs, preferred stocks, closed-end funds, anything, any type of security that's listed to trade on the major U.S. exchanges can make this list if it is trading in the pre-market hours and meets our thresholds. And let's narrow this list down to S&P 500 companies to get some insights what's going on there. And to do that, I'm going to use the filter here in ETF, drop it down. And from here, you get a list of ETFs to select from. The top one, SPY, that's the S&P 500 ETF. When you select it, the list below will get filtered by stocks that are holdings in that ETF. Okay, so SPY, that's the S&P 500 ETF. And you could see here, we selected that, and now we get stocks that are the constituents of S&P 500. We got 3 that made our percentage gainers list and 13 on a percentage decliners list. From this perspective, also looks like we're getting a bearish bias at the open. We're still in earnings season, and you can see here a couple of them over here. I think that's American Express and Visa. This little E letting us know that they just reported earnings either yesterday after market closed or this morning. The stocks are reacting to that. And on here, this is the decliners list. Top one, Intel, reported earnings. They're down 10%. So you could see you could you could see what's going on in S&P 500 stocks in the early pre-market hours. Let me see if there are no.
We did have a couple questions.
Okay.
Raj is joining us, I think, for the first time, is asking, is there a way to know net money flows into indices for given time periods?
Net money flows to given indices. I off the top of my head, I want to say that I don't have anything that could give you that type of information. So here, let me see if I could do it this way. So there's no exact way that I know to get, money flow into directly into an index, because an index, right, there are different ways to invest in an index. You could invest in an ETF that follows an index like SPY, but SPY is not the only ETF that follows the S&P 500. You have mutual funds that do it, and then you have different ETFs actually that follow the S&P 500. And then on top of that, you have ETFs that are following sectors of the S&P 500, right? So you got lots of different makeups of a certain indices also that could accumulate. Okay, so it would be difficult, to see it. And the mutual funds, by the way, they don't report all these mutual funds. They don't report inflows and net inflows and outflows on a daily basis. Some of them may, but not all of them. Some just like on a quarterly basis. And then there are probably other instruments that also aren't, don't report it that way. But we could get a sense of maybe how things are moving by tracking inflows and outflows into, let me see if I have it here, into ETFs. Like your ETFs, we could see inflows and outflows, and that may give you a sampling of what may be happening in other places, right? So you get a good sample of, well, if this is happening in ETFs, you'd have to make an assumption that something similar is happening in other instruments that are getting inflows and outflows, right? So if this is happening in SPY, then the mutual funds that track S&P 500, we might see a similar situation. Another place where you could take a look is at order imbalances, stock order imbalances. So let me show you guys this real quick. Actually, let me come here first. Explain to you guys what this is. So on market on closed stock order imbalances, right? What are they? What is it tracking? What kind of insights can we get from them? And when you look at investments into certain vehicles that have to create units or redeem units. Okay, so there are instruments people invest in, and those instruments need to be either created or redeemed, like a mutual fund, right? So mutual fund, if there's lots of net inflows into that mutual fund and not enough outflows, if there's an imbalance, then they have to create more units. If there's a lot of redemptions, people are selling them, and at the same time, not enough people buying them, that means they have to redeem those units and sell them off. Okay. That's how the creation redemptions work with ETFs, with mutual funds, sometimes with hedge funds, that they have to create them or redeem them. Okay. And when they create them and redeem them, typically the way they do it, to be fair, is based on a net asset value. The net asset value is based on the closing prices, the official closing prices. Okay, so those mutual funds that have to create or redeem have to get an execution at exactly the closing price. They can't do it 5 cents below the closing price. They cannot do it 5 cents above the closing price. They have to do it at the closing price. That's it. That's the way they do it. So to get the closing price, to sell at the closing price or to buy the closing price. Remember, you and I don't need the closing price, right? If you want to go buy stock, you could do it any time of the day. If the stock is at a price at 12 o'clock that you like, and you like this price, you can buy it at 12 o'clock. There's no reason for you to wait till the closing price, right? And if you want to sell the stock and the stock is at a great price at 10 a.m. in the morning, you could sell that stock at 10 a.m. There's no reason for you to sell it at the closing price. But those instruments that create and redeem, they have to do it at the closing price, right? That's how their NAV is tracked. NAV is based on closing prices, and that's where the creation and redemptions occur. So because they have to do it, the exchanges have a special order type. Now, you and I can use that order type, but really, that special order type is created so those institutions can use that order type to create and redeem. Okay, and that order type is to get a buy on market close or sell on market close, right? They need that closing price. So that order type says, and they could enter that order even at noon, but it won't get executed until the end of the day, right? So if they have at noon some mutual fund that tracks the S&P 500 gets a bunch of people trying to push into that fund, they'll start giving their orders to the New York Stock Exchange and Amex, wherever those stocks are listed. They're going to give them those orders, and those will get executed at the closing price. So they use that order, and one of the things that we could see is that if there's a big imbalance of all of a sudden of more buys than sells, okay, so they have to create units, and let's just say they have to buy X amount of Google, X amount of Microsoft, X amount of Meta, X amount, and they enter in all these orders to create the units, and then there's much more to buy than to sell, right? Because the specialists are trying to offset those buys and sells. And all of a sudden, you have much more on one side than the other. Once it hits a certain imbalance, I think it's like 50,000 shares. Okay, I believe it has to be 50,000 shares. Once it hits an imbalance of more than 50,000 shares and it go or over, the exchange gives a indicator 10 minutes before the close. I believe it's 10 minutes before the close that there's an imbalance, meaning that, hey, if you have shares to sell, there's a big block to buy. You could get it off at the close. And so this does indicate to other traders or whatever ones. It's basically an indicator to allow somebody who has the other side to come in and say you could get your shares off. There's a big imbalance. But what it does for us, it gives us a small indication on the day where those imbalances are, right? Which stocks, as you can see here. And it gives us an indication on what side the imbalance, on the buy side or sell side. Okay. So when here's for the whole market yesterday. So you could see here there's a bigger sell imbalance than buy imbalance in total. You can go here. So this will kind of give you a sampling, right? There's no number that I know of that could give you an exact number, right? Because you'd have to be plugged into every single, tens of thousands of whatever ETFs and mutual funds and all that to see their entire positions. And and I don't know of any that do it on a daily basis. You know, ETFs, you could probably get closer. But this will give you somewhat of an indicator what may have been going on, because you have a sampling of data and it's pretty large, right? You could see here that's, you know, between the two, over $1 billion worth of stock traded at the end of the day. Let me see, I think if you look at a particular stock also, let's say Apple, I believe, let me see if I have anything on it. So here's inflows and outflows just into Apple alone, right? So you could see like it's been moving higher since April, you know, kind of leveling off here. And what this does, this particular tool, is it tracks the net amount of stock held by ETFs, the net amount of Apple shares held by ETFs. Okay, is it trending higher or lower? So out of the ETF families, because the ETFs will show you on a daily, you know, because ETFs you could create and redeem, and specialists could create and redeem them on a daily basis. They'll show you the daily makeup of that ETF and the weightings and how many shares they're holding. So here we could see on a stock basis how much stock is either being, you know, accumulated or sold off in, let's say, Apple, right? And this gives you like a chart and to see if there's any trends. So you can see here, you know, kind of in April, it started going up. Right here, it's kind of leveling off. And there are different reasons. You know, one is, you know, more people are buying these ETFs, so they have to create more units. Another is that if some of these ETFs are rules-based, so even without more creations, they may have to buy more shares based on what's going on. So like, for example, S&P 500 is cap weighted. And if the weighting, if Apple's market cap continues to go up relative to the other market cap stocks, then they're going to have to reshuffle how many shares they own. Okay, so there are rules-based ETFs that they may have to buy and sell shares, or they have to create and redeem shares, and that will impact how many shares they hold in that ETF. So let's just take a look at SPY, for example. So here in SPY, you know, we could see that SPY, 6.33% of their holdings are in Apple alone, right? And then you could go and look at the other ETFs. I mean, hopefully that's helpful.
Yeah, that was super helpful, Dee. Thank you. We had a question from Michael McCrae. He was asking, how do I create a report that shows stocks with the highest short interest ratio? I don't think we have a short interest ratio, do we? Do we have a hard to borrow?
Yeah, we have a hard to borrow. So a lot of times, you know, I get this question about short interest ratio, and I think the assumption is that, well, there's few assumptions there. One assumption is that there's a report out there that shows the percentage of shares that people have that are shorting that stock with the position that it's the intent of the stock going down. Okay, so for example, 20% short means that somebody's sitting out there waiting for this, shorted the stock with the intent that the stock is going to go down. Okay, so there's no report like that, because number one, our financial markets, okay, are have lots of instruments that may require you to be short a stock, but not actually, you're hedging off a portfolio that you're not actually even short position. You just have to be short a stock. You might even have a position that you're short a stock, but you're better even if the stock goes up, right? So if you, let's say you have a derivative and you have a bunch of calls, and to hedge some of those calls, you have to be short stock to be delta neutral or offset some of your position. All right. So number one, there's no report out there that's saying that there's this amount of people holding a position that are betting on a downside, right? Because you don't know how much of it is actually being being used against the hedge. And there's also borrowing stock for other reasons, like things going on with dividend plays, and you have voting, people borrow stock for that, all kinds of stuff. Okay, so the assumption that you have a report which is going to tell you that this is the amount of people out there that will need to cover because they're short, that doesn't exist. Okay, because it would be very easy for somebody to cover that has a position that is hedged, and if it goes right through the market, they could exercise their calls. The other thing is that people assume that there's some kind of short interest that is updated in a timely manner, and that's also not the case. There's no report like that. You could kind of make assumption. Your best way to see if something is difficult to short is by looking at the derivatives markets. Okay, because the derivatives markets will show you if something is difficult to short, something is difficult to borrow and short, then those markets will reflect that borrow rate. That's the market teller. That's not like some report that's giving you, short interest, because I know where you're getting the short interest from. I know exactly where you're talking about, days to cover and stuff like that. And go read about that report, go read about who publishes it, read about the terms, read about, how frequently it is and what it means. And you're going to be, if you read it and study, you'll see it's not what you think it is. Okay. It's a snapshot picture at one time, at one moment in time, twice a month. Okay, so think of it, snapshot picture 2 times a month with no more insights than this is a number of shorts at this one moment in time. Which, by the way, those shorts probably near expiration go up and then come right back down a lot of times. So I think that from the way that people are looking at these, scanning for short interest, and thinking that there's like this, if there's this short interest that they see it, that means that somebody's going to have to cover and stuff. That's going to be deceiving. So as far as I know, there is no real short interest indicator like that, right? But if you wanted to see if it's really hard to borrow, if there's really a short buildup, okay, a real short buildup and a demand to borrow stock to short, you're going to see that in the derivatives markets. You're going to see that because, here, I'll show you this. I think it's under here. You're going to see that in the synthetic market, right? Because here's like an AMC, right? So in AMC, we could see that synthetically, there's a huge discount in a synthetic long, which means there's a huge premium to get a synthetic short. And that's going to be reflective of the stock loan spot price, right? That's going to, because you could create an arbitrage. In other words, there is a heavy demand to be short, and there are real short positions in there. There are actual short positions in there who want to be short this stock and hold it because they think it will go down, because they're willing to pay to do it, right? They're willing to pay you a lot of money to do it. Because if they didn't want to be, there's no reason to pay 30% below where the spot price is to short this stock in July, right? Let's take a look at it. So here, where's the stock? $5. All right, let's take a look at this July. So AMC, $5, right? You see these markets here, what these markets are saying. See all these in the red, meaning that there's no put call parity, right? What is it telling us is that the puts are way bid up relative to the calls. Okay. If you guys know put call parity, this is saying that there's a huge demand to short this stock, because more players think it's going to go down than up. That's what's going on here, right? It doesn't pay a dividend. There's nothing. This is a demand to short this stock. So you could go buy this stock right now if you're long. Think about it, for $5, $5.24, thinking that it's going to go long. But synthetically, here, set this up. You bought the $5 strike call for $1.41, and you could sell the $5 put for $3.05, right? Let's see what happens. You're getting a $1.64 credit, $1.64 credit for synthetic long. It's just like you see here, it's same thing as being long the stock, basically the same risk profile of being long the stock, a synthetic stock, but you're getting a $1.64 extra, right? Below $5. So you're buying it under $4, right? $3.40, whatever that is. So you could see here, the best place to really see where there's a short buildup is going to be in the derivatives markets, because that's actual money. It's not some ratio somebody created with two snapshots. This is real-time actual money telling you, right, that there's a big short. Not only is there a big short interest, if you disagree, you could take the other side. You could take the other side, and they're willing to give you, right, massive amount of premium to take the other side of that bet. So that's the best real-time indicator right there, where there's buildup in short interest. The other one, I mean, you looking at a snapshot at 2 moments in time a month, I'm not sure, like, really, what you would do with that even. And you don't have as much insights what's going on with it, because how do you tie it to anything, what's going on. But here, like, again, this will really give you,
this is what's happening today.
Yeah, these are actual, dollar indicators. This isn't a ratio. This is like, here's the bet. You could take the other side of that bet. You could, these are markets, right? These are real markets that you could buy and sell against, and those are the best reflections of what's probably going on.
All right. Well, we're right up against the opening. It is Friday, so we won't be back until Monday. Robert did ask, would Dimitri go through an explanation of the threshold list again? Maybe we can do that on Monday. You did put together a great presentation with, 8 minutes left. But maybe we can go through it all again for everyone and title it, and it would be a great presentation on Monday. Great job, Dima, as always, my friend.
All right. Awesome. Well, thanks everyone for joining. Stay safe out there. Have a great trading day. Hope to see you guys Monday.
Trade in peace, chameleons. Have a great weekend. Enjoy a